Did you know that to this very day, at the end of 2023, moving into 2024, that mortgage lenders still make bad loans, which are subprime loans, to borrowers? Because for the longest time, it was perpetuated that this no longer happens, that all the lending standards have been tightened and nobody gets subprime loans anymore. But that is actually a flat out lie, okay? And this is not just like some weird way to prove a point or anything like that. Subprime loans actually do still exist. In fact, there was a recent story in the news talking about how you can get one. So what is a subprime loan? A subprime loan is offered to borrowers with poor credit scores, typically 619 or less. And right off the bat, that's pretty funny because FHA will give you a loan even if you have a 580 credit score. You can even argue that FHA loans that are below 619 are all subprime loans, first of all. The only difference is it's backed by the federal government, aka you and me, the taxpayers. And the most common people who apply for a subprime loan, especially today, are people that have a previous foreclosure, bankruptcy, or other negative information on their credit report. Sounds probably like somebody that shouldn't be able to get a mortgage, at least for a while, right? Well, they can still get one. Now, of course, these subprime loans come with a higher interest rate due to the higher risk. That's kind of like a no-brainer. And lenders that are giving these subprime loans will require anywhere between a 10 to 30% down payment. So at least the buyer is required to have some skin in the game, but that's not too far off the bat when it comes to what normal buyers put down anyways. People that want to be financially sound in their property will usually put down 20% anyhow. Take a load of this, guys. The fixed rate subprime loans that are being given out today are typically longer than traditional mortgages. They can be anywhere between 40 or even 50-year terms for these mortgages. I didn't even know about this until today when I read this. That is absolutely crazy. They also offer them adjustable rate mortgages, likely the same type of mortgage product that got these people into trouble to begin with. It even goes on to say that most subprime loans will be adjustable rate mortgages, but don't worry, they have caps on it, so that way you don't have to worry about excessive increases. Like, give me a break, guys. Like, I don't think most people even realize what an excessive increase is. You know, if it goes from 7% to 9%, that's an excessive increase. That's an increase your payment by a tremendous amount, even though it's only 2 percentage points. And then they also have interest-only subprime loans. These are structured so that for the first 7 to 10 years of the loan, you will pay nothing but interest, and after then, only then, will you start paying down some of the principal as well. And then they also have something else called dignity mortgages, where it's basically a mix between a subprime loan and a conventional loan, where the borrower puts a 10% down payment and agrees to pay a high interest rate for the first 5 years of the loan. And then if the borrower makes all the monthly payments on time, the lender will lower the interest rate to a prime rate offered to applicants with better credit scores. So essentially you have to prove yourself for 5 years, and then they'll give you a better term. But then they go on to say, like, oh, you don't have to actually take one of these subprime loans. You can just get an FHA loan, because the minimum credit score for that is only 580, and you only have to put 3.5% down. Like I was saying at the beginning, that basically is a subprime loan. It's actually worse than a subprime loan in many ways. You have a lower down payment and a lower credit score, and it's backed by yours truly, the taxpayer. And then of course there's VA loans and USDA loans, which are also government-backed loans. But to get one of those, you gotta have a 620 minimum to get a VA loan and a 640 minimum to get a USDA loan. And those aren't fantastic credit scores, but it's still a whole lot better than a 580. But I've been hearing time and time again from all these different reasons of why the housing market won't crash, from all these economists and experts saying that, oh, the lending standards are much better than they were during the last housing crisis, and this is why there will be no crash. Like, give me a break, guys. It's literally still happening to this day that people with less than stellar credit and less than stellar financials are still able to get a mortgage today, moving into 2024. To say that that's a reason that no one's gonna have defaults and no one's gonna have trouble moving into the future is a flat out lie. And the reason why I expose these things and the reason why I bring these things up is to let people know the truth, right? Because I don't like being lied to by anybody. And when we're being told all of this nonsense that you're supposed to just believe without double checking into anything, well, we're starting to see that these things we're being told are not true. Now, there was a really interesting story come out today also from Realtor.com talking about how even if mortgage rates come down in 2024, then home buyers may still hang on for a better deal. This is also something that has being pushed as a narrative, like, hey, the moment that mortgage rates comes down, everybody's gonna jump into this market and pile back in like you've never seen before. But Realtor.com doesn't think so. And guess what? Realtor.com is owned by the National Association of Realtors, and they have a massive incentive and motive to push home sales because their entire business model relies on it. And for them to come out and say that people aren't going to rush back into the market when rates come down is a big deal. So let's take a look at what they're talking about here. They're saying that next year they believe that both home prices and interest rates will drop. Buyers may still hold out for lower rates, and sellers in turn might need to cut their prices to close deals. And this is basically running off the psychological principle of the FOMO that pushed people into the market on the way up. Like, well, I better buy now before I can't afford it anymore and the prices and the rates go too high, right? That's what so many people use as their logic to jump into this market at probably one of the worst times ever. But the same psychological tactic actually applies on the way down, because, for example, when things are in reverse and prices are coming down along with interest rates going down at the same time, then buyers are going to feel exactly the opposite. Well, maybe I should wait because I see prices and rates continue to go down, so the longer I wait, the better deal I'll be able to get. And let me tell you guys, if you don't think this is going to happen, then you don't know real estate. Because when I first started my real estate career in 2009, the market was crashing. Prices were still coming down, more inventory continually coming to the market, okay? And this is exactly the mentality that so many buyers had back then and would not touch real estate because they were afraid that prices were going to continue coming down and rates were going to continue coming down. So if I just wait a little bit longer, I'll be able to get a better deal. And you know what? Many of them were right. They were able to get a better deal because between 2010 and 2012 were arguably some of the best times to buy a house in modern history. Anybody remember this place? It's almost gone. They've been knocking it down, little by little. No implosion here. Probably a couple more months will be totally down. Ready for the new super fancy high-rise take its place. So with all of this, Realtor.com is predicting that in 2024, the median home price will drop about 1.7%, which is a lot more than what Zillow just predicted at only 0.2%. And all of these places, by the way, earlier this year, were saying that next year we were going to see home prices go up. So you can see how much they have changed their tune. Even the chief economist over at Realtor.com, Danielle Hall, she's saying how the longer you wait, the better your mortgage rate is going to be, especially if prices also soften. So even she's saying now that next year is probably going to be a better time to buy than 2023 was, and that's probably going to be continuing to be the case, where each year after the next one is the best time to buy because prices and rates are coming down. But they're not saying prices are going to come down everywhere, and neither have I. I've never said prices are going to come down everywhere, guys. In fact, their forecast says 63 out of the 100 largest metros in the country are still due to see a price increase in 2024 because of inventory constraints. And that's the number one thing that's been keeping this market high, is inventory in some areas just hasn't bounced back yet. But eventually it probably will. Now, one other thing that we saw emerge during the pandemic is the record amount of tenants that stopped paying their rent due to all the rental moratoriums that were in place. Well, now landlords are starting to find a way to fight back against this and get these tenants to leave. And it's not what you think. Now, my first thoughts on this once you hear this tactic is, I don't know why people who aren't paying rent would even care about this to begin with, but apparently it's working in some places. And what it is landlords are starting to ruin tenants' credit scores over not paying rent. Because in case you did not know, your landlord can report on-time or not on-time rental payments to the credit reporting agencies. This is not a new thing that landlords have been able to do this, but not many of them did it until now, and they're using this as a tactic to basically get tenants to either start paying or move out. So basically what they're trying to do is anything that they can to avoid taking an eviction to court, because that costs money, it's time, it's effort, and really no landlord wants to go through an eviction. So they're saying, hey, if you don't pay, I'm going to report these non-payments to the credit bureau and your credit score is going to be destroyed. Just like not paying a mortgage, just like not paying a credit card or anything else. But obviously the concern with this is there's room for people doing the wrong thing, right? If the landlord uses this as a threat against you, even if you have been paying on time, well, then it becomes a problem, and then you may see yourself in court anyways because this person's trying to, make it look like you're not paying the rent even when you are. And they're really worried about inaccurate information because it's already common for big lenders to submit inaccurate information, but they think with landlords it's going to be a complete nightmare and that it will be 100 times worse because of the human error factor. And tenants can dispute the late payments if it's inaccurate information, but they also have to verify this and prove it. And part of the process of proving this is to get proof from the landlord that you paid on time. And why on earth would they give that to you if they're trying to force you out of the place, right? And guess what, guys? If you are not paying your rent on time and your landlord is reporting the payments late, there's nothing you can do about it. You can't dispute that. You can't fight it. Even if you're legally withholding rent because the landlord's not keeping up their end of the lease, they can still report you late and it can still destroy your credit score. And this story is out of New York, where a lot of landlords are using this tactic, who are slumlords apparently, that charge people big money to live in piece of crap buildings that are falling apart and have rat infestations and all of this. And under those living conditions, the people are supposedly not supposed to pay the rent, but the landlord is using this as a tool to force them to pay or have your credit destroyed. So the number one thing I wanted to bring up with this is that paying your rent is just as important as paying any other bill if you're worried about the future of your credit and your future borrowing power. Because a lot of people don't understand that can go against you. It can also help you. If you pay your rent on time, you can ask your landlord to make sure they're reporting that to the credit agencies to make your credit even stronger. So that way, when it is time to go out and buy your own house, you're going to have stellar credit for that. And on the very flip side of this, HUD is now proposing a 30-day pre-eviction notification rule for tenants that are in public housing and owners of properties who are participating in HUD multifamily project-based rental assistance programs. And what they want landlords to do from now on, which is not set in stone yet, this is not a law, this is something they're going to decide next year, but what they want to do is they want landlords to give all tenants a 30-day written notice before even filing for an eviction, guys. Now, to put that into perspective of how much time that would give people to stay in units for free, it adds up a lot. Because here in Florida, for example, if the tenant doesn't pay the rent on time, you can put up a 3-day notice on their door to vacate the premises or pay, okay? That's what's called the 3-day notice here in Florida. And if they don't do anything after that 3-day notice is posted on their door, you can start filing for evictions proceedings. And don't ask me how I know this, because I actually had to do this before. And it's not a good feeling, guys. Like, no landlord ever wants to evict a tenant, but sometimes you just have no choice. When 2 or 3 months go by and somebody hasn't paid and you're listening to sob story after sob story of why this and why that, but meantime, they're still buying booze and buying cigarettes and all of this, it's time to let them go. So they want landlords to give this 30-day notice now to tenants and give them instructions on how they can cure lease violations for non-payment of rent and information on how to recertify their income and request a minimum rent hardship exemption if applicable. So clearly, HUD is trying to do everything that they can now that all these moratoriums are up and they can see the amount of people getting evicted is on the uptick. They're trying to keep more and more people in their homes a little bit longer. Just another form of kicking the can down the road. And I don't understand why they would do this, guys, because I can tell you that the vast majority of landlords don't want to do an eviction. And if they do, it's a last resort, okay? So it's not like most landlords are saying, okay, your rent's 5 days late, I'm going to evict you. Maybe there are a few landlords out there who would do that, but I would be willing to bet that well over 90% of them would not do that. They would try to work with the tenant, keep them in there, find a way to help them get back on their feet, and keep the rent coming in, okay? Because it's going to be cheaper to do that than to go through a complete turnover for the unit. And this is funny the way that they frame this, because they say this proposed rule would give HUD-assisted renters an opportunity to catch up if they fall behind on rent, while also preventing landlords from encountering costly unit vacancies. Like, okay, the only way it costs more to have a vacancy is if the tenant was paying and now you don't have a tenant anymore. But it's already like having a vacancy. It's actually worse in a lot of ways, because you still have, you know, the wear and tear on your property when someone's living in there for free and not paying the rent. Having a non-paying tenant is a vacancy, okay? So to frame this as somehow this helps landlords because, you know, it'll lower the cost of having a vacancy is an absolute lie. They're doing this to make sure that more and more people don't end up on the street, because that's where things are going right now. Because check this out, this proposed rule would affect an estimated 3.9 million people, which is 2.2 million households, okay? That is a staggering amount of people, guys. You're talking about 4 million potential people that could end up getting thrown out on the street sooner than later if they don't pass this. Now, I'm all for giving people a leg up and giving them a second chance if they seem legit, if they seem sincere, that they can really turn things around. But even when it seems sincere, a lot of times it's still a lie, guys, and I know this from firsthand experience, okay? But other times some people are really just down on their luck and they just need a few extra weeks to catch up, and that's okay. You can help people out like that without evicting them. Now, last week I covered a story about how the VA has been extending the new foreclosure moratoriums for anybody with a VA loan until May of next year. Because what they're trying to do is they're trying to give these people who are behind on their VA loans access to a program called the VA Servicing Purchase Program, where the VA purchases and modifies the qualifying loans in default. And basically what they're trying to do with this is keep veterans in their home so they don't get foreclosed on. But since there's a massive amount of delinquencies right now, the president of the Mortgage Bankers Association is concerned about this. He says that there's significant concerns about this foreclosure moratorium because they're not telling all these loan servicers how they're going to get paid in the meantime. They want a detailed plan about how this is going to work, and so far the VA has given them diddly squat. It says that loan servicers provided relief to struggling borrowers during the pandemic by advancing the payments owed on their mortgages and are willing to do so again. However, the VA needs to provide a detailed plan on how servicers will be reimbursed for advancing payments on behalf of borrowers. CEO of the Mortgage Bankers Association is saying, yeah, well, we'll help out, but we got to know that we're going to get our money from this, guys, because, you know, you want us to basically front the bill for all these people who aren't paying the loans, but how do we know how we're going to get our money back? And so far, there's been no detailed plan laid out over this, and so that's the biggest concern with all of it. Now, do I think that they're going to come up with a plan and find a way to get these loan servicers their money? Of course they will, probably thanks to, you know who, the American taxpayer, just like who backs all these other terrible loans throughout the country when people don't pay. So just more and more games that are being played, kicking the can down the road, keeping the housing market propped up just a little bit further so we don't see the wave of foreclosures hit the market. That's what they're trying to do, guys. But I personally think that no matter how much you help people that are behind on their bills, eventually they're going to be behind on their bills again, because most of them are behind because of financial irresponsibility, not because of a hardship. Maybe a few of them are behind due to temporary hardship, but I don't think that's the case for the vast majority of people, and you can't fix ignorance. People have to want to fix that themselves. So if you enjoyed this video, make sure you subscribe to the channel, and if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.